Hello, hello, and hello. Happy to be back, kind of stationary for this week's Mortgage Minute. Wanted to take a couple minutes just to talk more about student loans for those of us who, who have been in the mortgage business or have attempted to apply for a mortgage. Student loans can be a very pesky problem, and they put a lot of pressure on your debt ratio. Especially if you're like me and you have a lot of student loans, they can put a lot of pressure on your debt ratio. So how do we deal with it? Most lenders nowadays are dealing with it by applying the 1% rule. 1% of the loan amount, what you owe, becomes your monthly debt obligation as we try to calculate your debt to income ratio. And if you got over $200,000 in student loans, that means you got $2,000 in monthly debts that are now added, and you've got to qualify with that $2,000. So what are the options? And there are some options to get around using 1%. Let's kind of talk through those. The first option is, let's talk FHA. FHA is going to hit you with 1%, period, unless you can get what's called a fully amortized student loan payment. What is a fully amortized student loan payment? And I'll go full screen so you can see this. So there are always different repayment plans. The one repayment plan that most of us are familiar with is something called an income-based repayment plan. Well, that ain't gonna work. An income-based repayment plan will not work for FHA. It won't work. What will work is what you see here called a standard repayment plan or an extended standard repayment plan. You can't use graduated, and you can't use extended graduated, and you can't use income-based repayment plan on FHA. You can use a standard or an extended standard. In this situation, this person has $270,000 in student loan. 1% of that is $2,700 I got to use for a monthly debt. Well, a standard repayment plan is $3,757, so I wouldn't want to use that one. So let's go look at the extended standard. That's $1,924. So I could use $2,700 a month, which is 1% of my student loan, or I can use $1,924, which is a lot more manageable, right? We're talking about saving almost $800 a month in debt. Debt that's used towards student loans, that is, right? So here you see you've got $276,000. So it's going to be somewhere around $1,847, worst case $1,924 is what we would use. So that's a pretty big savings, okay? So this is what's called a fully amortized repayment plan, And you've got the standard, graduated, extended standard, and then extended graduated. You can only use standard or extended standard. That's a fully amortized loan in order to get a lower payment than 1% on FHA. So just wanted to make sure and kind of talk a little bit about that, because I think there's still a lot of people that may be getting stuck a bit on the student loan debt, and there are solutions to getting around and dealing with that. Now let's talk about Fannie Mae, which is a conventional loan. So on Fannie Mae, they will use 1%, or you can use an income-based repayment plan. If you're on an income-based repayment plan and it shows $0 or $10 or $15 in your credit report, you can use $0 or $10 or $15 in your credit report if it's a conventional loan. Remember, you can't use income-based on an FHA, but you can use it on a conventional loan. So on a conventional loan, income-based is a perfect way to go. It'll get you a lot lower payments, either $0 or whatever that is. You just got to get the documentation, the paperwork to show that you're on an income-based repayment plan, and then you can use that. And the last option is Freddie Mac. So Freddie Mac will allow you to use 0.5% instead of 1%. So Freddie is an option. Freddie Mae is an option that can be used. Freddie Mac is an option that can be used to get approved on student loans. So, if 1% is too much, try Freddie. Freddie's a 0.5%. If 1% is too much, try to go conventional. And if they're on an income-based repayment plan, you can get off with using whatever the credit report shows. If it's $0, use $0. If that option is not available, you can go the FHA route. And if 1% is too much, you can use what's called a fully amortized repayment plan. Let me know what questions you've got. This has been a Mortgage Minute. Thanks so much.